Every hunting season, big chief's collectors come to Grug's cave. They count Grug's mammoth teeth. They count Grug's fish. They count Grug's berries, then they take some. Not all, but some, every single season, without asking, without negotiating, without saying thank you. Grug not happy about this. But then Grug notices something. The path between caves, the one Grug uses every day to get to market, someone built that. The cave guards who keep the valley safe at night, someone pays them. The elder who teaches children to count, someone funds that. Grug looks around. Tribe infrastructure everywhere. All paid for by the teeth collectors. So are taxes theft, or are they the price of civilization? Today Grug explained what taxes actually are and how they work. The tax code is written with legal ways to keep more of your money. The wealthy know them. Most regular cave people don't. First, what are taxes? They are mandatory contributions to fund collective services like defense, infrastructure, and education. Egyptian pharaohs taxed grain. Roman emperors taxed trade. Modern governments tax income. The form changes. The principle never does. Now let Grug explain how income tax actually works. In progressive systems, you pay different rates on different portions of your income. First 10,000 teeth, 0%. Teeth 10,001 to 40,000, 12%. Teeth 40,001 to 85,000, 22%. Higher income means higher rates apply. If you earn 50,000 teeth, you don't pay 22% on all of it. You pay 0% on the first part, 12% on the next. People say, I don't want a raise, it'll push me into a higher bracket. Grug facepalm. A raise always puts more money in your pocket, always. Now you know the truth about taxes. Go hunt more teeth. Now the most important distinction in all of taxation. Tax avoidance versus tax evasion. Tax evasion. Hiding income, lying to tax authorities, not reporting earnings. Illegal. Potentially prison. Grug strongly advise against. Tax avoidance. Using legal structures, accounts, and strategies to reduce your taxable income. Completely legal. Encouraged by the tax code. What every wealthy person does. The line between them is simple. If the government wrote a rule specifically allowing it, it is avoidance. If you are hiding something from the government, it is evasion. The wealthy do not evade taxes. They have too much to lose. But they aggressively avoid taxes using every legal tool available, and the tools are available to everyone. Most people just never use them. Let Grug walk through the most powerful legal tax reduction tools available to ordinary cave people. Tool 1. Tax-advantaged retirement accounts. Governments want you to save for retirement. So they created special accounts where your investments grow either tax-free or tax-deferred. Traditional retirement account, you contribute before tax money. Reduces your taxable income today. If you earn 60,000 teeth and contribute 6,000, you pay tax on 54,000. Your investments grow without being taxed each year. You pay tax when you withdraw in retirement, typically at a lower rate. Roth-style account. You contribute after tax money. No tax reduction today, but all growth is completely tax-free forever. You withdraw in retirement and pay zero tax. Not on the original amount. Not on 40 years of compound growth, zero. If you are young and in a low tax bracket today, Roth is often extraordinary. Decades of compound growth, completely tax-free. Grug considers this one of the greatest legal gifts governments offer. Most people never fully use it. Tool 2. Deductions and credits. Deductions reduce your taxable income. Credits reduce your actual tax bill directly. Credits are more powerful. Common deductions. Home office, business expenses, student loan interest, charitable donations. Health savings account contributions. Grug not give specific tax advice because laws vary and change. But Grug recommend spend 2 hours per year with a qualified tax professional. Cost, maybe 200 to 500 teeth. Potential savings, often thousands of teeth. Return on investment, extraordinary. Now Grug explain the secret that makes most regular cave people genuinely angry. Why do wealthy people often pay lower effective tax rates than middle-class workers? 3 reasons. Reason 1. Capital gains versus ordinary income. When you work and earn a salary, you pay income tax rates. In many countries, these go up to 37% or higher at top levels. When wealthy people earn money from investments, selling stocks, or real estate, they often pay capital gains tax rates. Long-term capital gains rates in the U.S., for example, 0, 15, or 20% depending on income. Maximum 20% versus maximum 37% for ordinary income. Wealthy people structure their compensation to receive more capital gains and less ordinary salary. Lower rate. Legally, Warren Buffett famously pointed out that he pays a lower effective tax rate than his secretary, not because of tricks or loopholes, because most of his income is capital gains taxed at lower rates. Reason 2. Depreciation and paper losses. Real estate investors in many countries can deduct depreciation of their properties against their income. The property may actually be increasing in value, but on paper they show a loss. This loss offsets other income and reduces their tax bill. Reason 3. Business structures. Business owners can deduct legitimate business expenses before paying tax. Travel, equipment, office space, professional development, all potentially deductible. Employees cannot deduct these things. Business owners can. This is not unfair in the technical sense. These rules exist in the tax code for everyone to use, but you need to know they exist. And you need to structure your affairs to take advantage. Now Grug give you the practical action plan. What should most regular cave people actually do? Step 1. Maximize tax-advantaged accounts first. Before investing anywhere else, fill your tax-advantaged retirement accounts to the maximum. This is free money from the government in the form of tax savings. Never leave this on the table. If your employer matches retirement contributions, this is an immediate 50% to 100% return on your contribution. No investment on earth gives you that guaranteed return. Maximize employer match always. No exceptions. Step 2. Use health savings accounts if available. In some countries, health savings accounts offer triple tax advantage. Contribution is tax deductible. Growth is tax-free. Withdrawals for medical expenses are tax-free. Triple advantage. If available to you, use it. Step 3. Understand what is deductible in your situation. Spend time or pay a professional to understand every deduction available to you. Home office. Vehicle use, education, charitable giving, business expenses. Most people overpay because they simply do not know what they can deduct. Step 4. Think about capital gains. When selling investments, holding for longer than 1 year typically results in lower capital gains rates versus short-term rates. This alone can save significant teeth on large investment gains. Step 5. If self-employed, take this seriously. Self-employment opens up significant tax planning opportunities. Business deductions. Retirement account options unavailable to employees. Health insurance deductions. The self-employed tax system rewards those who understand it. Grug's bottom line on taxes. Taxes are real. Taxes are permanent. You cannot avoid them entirely, but you can legally minimize them significantly through knowledge and planning. The wealthy pay lower effective rates not because of corruption, but because of knowledge. That knowledge is available to everyone. Tax-advantaged accounts, deductions, understanding capital gains treatment, and basic tax planning can save you thousands of teeth. Thousands of teeth per year, compounding for decades. The difference between a comfortable retirement and a struggling one. Grug pay what he legally owes, not a single tooth more. Next video, Grug discovers real estate. Tribe says buying cave is always smart. Grug investigates whether renting mammoth skin tent is sometimes the better choice. The answer will surprise you. Do not miss it.